stage today with my super fantastic. Oh, we are streaming now. Good morning, everyone on YouTube. Welcome. We've been saying welcome to those who are live on Zoom. We're streaming this meeting live on YouTube as well. Good morning. So please share if you have people who you think need the information, and believe me, everybody does, who need the information about investment. Please share this with them. Send them the YouTube link. Send them all of the information that they need to join the meeting. It's good to be here. It's 10 o'clock, and I officially say welcome to the Earn Better, Invest Better webinar. Welcome. Okay, without much ado, I'm going to invite my dearest client turned friend turned sister, Edith Ozumba. Edith, please confirm we can hear you. Your video is off, so I just want to be sure we can see you.
Okay, yes.
Okay, so it gives me great pleasure. Yes, I can hear you. Edith is a guru. She's a guru in the marketplace. There isn't going to be too much formality around introductions today, but she's going to share with us for 15 minutes how she has managed to conquer, I wanted to say conquer the whole food market, but it's okay. If you're a baker here or you've ever eaten a cake made in Nigeria, I can bet you. Sarah, please take charge of Annabelle's. If you just a minute, okay, thank you. If you've ever eaten a cake made in Nigeria, chances are you have eaten her product. She's that influential. Ladies and gentlemen, please make welcome Edith Ozumba as she talks to us for the next 15 minutes about earning better. So it's good to have you. Welcome.
Thank you so much, Tobore, my coach. Because you are my coach. You have done a lot in my life in the past 10 months now. Yes, 10 months. We got to know each other in January. I saw opportunity with you, and immediately I jumped at it. I have been looking forward to, managing my, finance personally. Managing my finance personally, and it has not really been easy. You know how you plan every year, you plan this, I'm going to do this, I'm going to do that, you list everything out, and by the 7th month, 8th month, you just find out that you've not even taken a stand on anything, you've not even done one. And for my case, the problem was not the money, because the money was actually coming in terms of business, but in terms of personal financing, I didn't know what to do. I didn't know how to go about it. Tobore introduced me as that business guru. So I didn't have much problem with managing that of the business finance, but that of managing my personal finance was a lot of struggle for me, and that was where she really came in and helped me with it. I have really grown in terms of personal finance, because with your personal finance, you see yourself growing personally, not just your business growing. Your business is growing on one side, but you as a person, you are growing. You tend to have you tend to be able to invest in the right places. It's somebody else's job to kind of tell you, put it in here. You will, in 10 years' time, in 5 years' time, this is what you get. So she did a lot of analysis with me, and I saw where I was. I saw where I saw what I'm supposed to have done for my children that I've not done. I saw what I'm supposed to do for myself as a person that I've not done. And to some extent, the first thing that happened to me was that fear. What's going to happen? Like, what's going to happen to my children? What's going to happen to all that I've worked for? How is it going to be? That reality, making me see all those reality made me to put some things in check. So I'm not going to go into her own specialty, because her specialty was to grow my personal finances for me, which is part of what we are here for. But then to be able to grow your personal finances, it means that there's somewhere money needs to come for you. And that's where I come in. I'm going to be helping you to also think about how you can grow wherever your money is coming from, so that you can also grow your personal finances. And that brings me to, first of all, some of you know that I'm a manufacturer. Um, okay, I don't know if she has told you my name, but let me tell you again. I am Dr. Engineer Edith Ozumba, and I'm a manufacturer. I'm actually a chemical engineer, and I've also ventured into uh, deep marketing. You know, with marketing without marketing these days, you know, your business is not really, you won't get the best out of your business. So I'm also deeply into marketing, and because of that, I've also opened a marketing agency, okay, that helps my business and helps other businesses too. And I'm also into coaching and mentoring and community building. There's a lot on my hands, okay, but every one of them receive good attention. I've not forgotten my family too. They all get their attention, and I have to do all of this within 24 hours. Everybody has 24 hours, right? That's what I also have. I have 24 hours, so I have to do all of this within 24 hours, and already I have 8 hours that I need to sleep. Okay, so 8 hours taken out of 24 hours, that's what I have left. And some of this, what is left, I also have to use it to rest. And I also have to, I also have to flame joy. You know what I mean? I have to also enjoy my life. So based on that, I know that I needed to structure my business. So with that, I learned how to do this effectively over time. By the way, I have over 27 years of business experience. So what I have learned over the years has helped me, to build my business consistently, because I started very small. So I didn't really have the money to hire all the expertise that is needed to run a business to that capacity that I wanted it to be. So a lot of these things I needed to learn how to do it and grow the business to what it is today. Right now, I can hire whoever I really want, as long as you have the expertise. But then it started somewhere. Back in 1997, I started this business with just 500 naira. Okay, and 500 naira today has turned to over, we're online, so let me not be, before some people come for me, but it has turned to, I share this with my inner caucus, you know what I mean. So, but this business, this 500 naira today has turned to a lot of millions, if not in billions, as we talk right now. So we have a lot of turnover every year. So, but I bring you good news also. I know that for you to have your financial, for you to be able to grow your personal finances, you need money. I like being very strict. I don't like speaking too much grammar. You need money. So money is what you will use to grow whatever finances you want to grow, especially when it has to do with personal. If you're not earning well, then it's hard to really tell you to do this or do that when it comes to personal finances. So you need to earn to some extent. You need to earn. But then it is also good to start wherever you are. Okay. So in terms for your business, like I said, I bring you good news, and the good news I'm bringing is how to structure your business. structure your business and accelerate growth. To be honest, a business that is not structured is like you keep pouring water in a cup and it doesn't get full. It doesn't get full. Why? Why is it not getting full? Because it's leaking out from somewhere. There's escape route of what you are pouring in. It doesn't get full. Okay. And then some people will say, know yourself. Know yourself. Be proud of yourself. What if you know is not enough to take you to that level that you aspire to be? What if it's not enough? And that is where you need to learn more. You need to learn more to be able to grow your business to that level you want it to be. I have done it before, and that is why I am bringing this good news for you to also see how to do it. So I have this program called Build Structure, Accelerate Growth. Now, build structure, accelerate growth. What will it do for you? What I do with this course is to diagnose your business. Everybody's challenges. We don't all have the same challenges in our businesses. So part of what I do first is to identify where the gaps are. What is the problem? Where is the challenge? Where is the gap? So once this is identified, we go straight to solving it. We go straight to solving it. Some of these gaps are embedded in structure. Some of these gaps are embedded in your systems. So we go straight to closing up these gaps. And once these gaps are closed, then whatever you are pouring in, which is like, when I mean pouring in, most times it has to do with revenue. Whatever revenue you are pouring in, it will stay. And with revenue, you can expand. With revenue, you can think and execute. You can plan and execute. Have you experienced a situation where you want to do something and you just can't find cash to do it? Probably this cash is embedded in some goods, or not, maybe sometimes it might not even be cash, but enough skilled human resources to carry out this task. Probably you don't have enough of it, or you even have a lot of people in your team, but then they are not skilled. They don't seem to understand what your dreams are. They don't seem to understand where you are going. It's only you that understand what you want to achieve and where you are going. Others don't understand. You tell them move, they move. You tell them stay, they stay. And when you don't give direction to do anything, nothing is done. Okay, so this is where I come in, so that your team will begin to understand your dream. They'll begin to understand your vision, begin to understand your mission, and begin to run with it. I tell you, some of my staff, they are even running faster than me these days. Some of them, I'm like, please hold on. It's my dream now. Wait, hold on. You are too fast. Okay, so you have some people that have taken the dream and they are running it, and they are looking back and say, madam, what are you still waiting for? What are you still waiting for? I'm moving, So but these kind of things only happen when you have built structure. And that's why I named this course Build Structure, Accelerate Growth. When you don't have structure, you can't truly accelerate growth. You can't truly do that, because whatever you are pouring into the system is going out of the system out of the system without achieving anything. So what will you get with this course? First of all, a step-by-step framework to build structure in your business. Like I said, I'm looking at this in your business. It's not a general thing. I'm not doing a general thing in your business. So a step-by-step framework that you will have to keep building. You go back, you look at it, you build it. To be honest with you, building structure is not for the faint-hearted. I have to be honest with you. And it's not a one-day event. And that's why I say you will build structure, you will have a template that you will keep working with. You have a framework that you keep working with, and you keep checking it and know whether you are in line all the time. Okay. Then there will also be a customized growth plan tailored to your goals. So it means that I will help you to build goals, what you want to achieve, and then there will be a customized growth plan for this purpose. Okay. Then there will also be one-on-one coaching sections. There will be one-on-one coaching sections. I believe so much in one-on-one. I hear you, you hear me. I want to know, I want to understand. Sometimes even the the gesticulations mean a lot. You can't really say it. You can't put it in English. You can't put it in words. But the gesticulation, I want to see all of that. Okay, it helps me to understand what you are actually trying to express. Then there will be practical assignments to implement weekly. For those who are already working with me, I can drill. I can drill. I have this lady working with. In fact, a lot of time now, she doesn't want to call me even in a week. If she doesn't call me, I call her. So what is the plan? What are you doing? Let me see. I want to see. Right now, she already has her own factory. We're almost at the production stage. Okay, we've done all the piloting, we all done all the machine installations, everything is ready. It's just to kick off, and we're already at the NAFDAC registration, almost rounding off with NAFDAC registration. So all this process, I help to see you through in all of it. Then systems for finance, for sales, for management, because there are systems for this. Monitoring and evaluation. You need to know how to monitor your system. You need to know how to evaluate your system so that you know what to do next. You need to know how to even take the data, because data is important. I work with data a lot. If you want to tell me anything, just you just come with your data. Don't just come thinking out of the blues. My people will tell you the first thing they will tell you is that I will tell them, come with the problem, come with the solution. You don't come to me for me to think for you. You come with the problem, you come with the solution. Then you explain the problem and you explain to me what you want the step you want to take. And my own part is to look at what you have presented and give my go ahead, or to refine it and say, okay, go this way, let's try it this way. Okay, so you also have a clear 90-day roadmap for scaling, because I believe in scaling. I started with just one product. Okay, and today I can't even count. We have more than 12 products. Recently, just day before yesterday, our seasoning came out. So we now have Acabado seasoning. We have the Acabado beef seasoning. We have the Acabado chicken seasoning, and we have the Acabado stew and jollof. Okay, and other ones are still on the way. So these are the things, all my success, all my challenges, and these are all the things I put together in one course to help you save. And then what are the results you should be expecting? First of all, you gain control over your business operations. If you are not in control of your business operation, I wonder where you are going. So you will gain control over your business operations. You will increase profit margin. See, money is the key. Money is the key. When you are cash bound, when there is no cash flow, you can say whatever you want to say, you want to do, but you will not achieve it. You will not be able to execute anyone, because there is no money to do that. So you will have you will increase your profit margin with proper financial management. Now, my coach here, Tobore, is here to help you with financial management. She does it better. Now, you will also be able to build a team. You can't work alone. You build a team that works without constant supervision. How do you feel like when you can pick your bag, your luggages at any time, even without notice, and travel and stay 3 weeks, and you come back, everything is like you never left? How will you feel like having a company like that? That's what I enjoy. Okay. Then
Right.
you want to create a system where your business grows even in your absence. Like, you don't need to be there. Every one of us are envying some companies that their CEOs are not even there anymore. How will you look like if you are not even anymore? Like, let's say death is inevitable. The most I will live now is 60 years. That's the most. That's the most. In fact, see, by 60 years, people will be
60
looking
more
at you like,
years.
by 60 years, people will be looking at it. Waiting.
Yeah.
This man, even me, probably by then I'll be asking for, I need to go now. This thing is too much. I need to go. 60 years. Okay, 60 years more. That's a long, it looks like a long time, but it's already here. Now, from that 60 years, I won't be active the whole of that remaining 60 years. Probably my next active years, maybe maximum of 20 years. So how will the company be after that 20 years or in 10 years' time? So if you don't successfully hand over a company or your company to the next generation, which most likely might not even be your children, then it
Yeah.
means you have not structured the business properly. Do you want to hand over a shaky business to somebody? Do you want to hand over a business that is like dead on arrival to a successor? Is most likely is not going to survive. Let me tell you what I heard recently. In Nigeria, there's only two businesses that looks like is going to hand over to the next generation. There's only two businesses that look like it's going to hand over to the next generation. Now, and those two businesses, I won't name them here, but in Japan, we have businesses that have survived over 7 generations. 7 generations.
Yeah.
Are we looking at such businesses for our own hard-earned time? Those times we have put in, those sleepless nights we have put in our businesses, are we looking at it? So I will leave you with this. I will leave you with this very easy one. Book a clarity call today, start your program today, and accelerate growth. Thank you.
Wow. Thank you very much. Thanks a lot, sis. Thank you for sharing with us. For those of you who just joined, I'm not sure you understand who just spoke with you. For many of you who are still in small business, you may not know. But like I said at the beginning, if you have ever eaten a cake made in Nigeria, chances are you have eaten Edith Ozumba's product. She's the owner of the brand Akabado. Akabado is it's such a massive brand. They make food color, icing sugar, flavors, all those things that bakers use in the confectionery space. And now she's going into the bigger food space. So she's doing spices, seasonings, etc. She manufactures and exports. She was trying to be conservative again because we are dealing with numbers on a live call. She's actually grown her business to a multi-billion naira business. And I didn't want to use dollars, but it's okay. She's much bigger than she's letting on. And what she has done for us today, just to tell you that it is possible. Many people refuse to learn about investment because they have the mindset that she is the person that has made money that will invest. Today, we brought her just to charge you a bit. You can make money and you should. Sis, thanks a lot. Thanks for sharing with us. Thanks for joining this call. I deeply appreciate it. Thank you very much. Please, let's just show our appreciation to my beloved client turned friend turned sister. And she told you we met 10 months ago. It looks like, it feels like 10 years already. All right. So thank you very much, sis. Thank you. To those on YouTube, Theodora, can we say thank you very much? Can we see those on YouTube? Are they here? Can we hear from them? Can they hear us? You know, YouTube, those on YouTube, we won't see you, but we hope you see us and you hear us. Theodora, please confirm, can we get some feedback from YouTube before I start sharing my slides?
Yes. So yes, thank you, Coach Edith. Wow, thank you so much, ma'am. So
okay.
There are some responses.
All right.
Thank you so much.
All right.
Yes. There are responses.
Thank you very much. Okay, Theodora, thanks a lot. Okay, so it's time for us to get into the business of investing. Now you have made money. It's time to invest it. Let's get down to it. I plan to release you all at 11:30 today. Implication of this is that I am going to run at the speed of light. You want to learn investment in 1 hour. I wish you luck. So we're going to do it together, okay? I'll start sharing my slides and then we'll go right into it. Theodora, I'll need you to confirm that you can see my slides if you don't mind. Just, my word, just a minute. Theodora, can you see my slides now?
Not yet.
Not yet, okay. Just 1 second. Sorry, just a minute, please, for everyone. Just hold on a second. Okay, I don't know why I can't seem to find my slides. Okay, so Theodora, just give me a minute. I will have to reconnect. My laptop is acting up. So if you don't mind. Can anyone see my screen now? I'm seeing someone say they can see it. Can you actually see my screen? Zoom is acting up today.
Not yet. Not yet.
Okay, just a minute.
They can see you on your screen, but not your slides yet.
Okay,
Yes.
my slides are refusing to load. Please pardon me. Let's hope that it loads now. Okay, it should load now. Can you see it now?
It's coming up. Yes, we can see your screen now.
Finally, I deeply apologize. Sometimes these things happen on the laptop. Okay, so it's time to dig in. Once again, I say a very big thank you to Dr. Edith Ozumba for sharing the first 30 minutes with us. In fact, the first 20 minutes with us. And now we're going right into the Invest Better arm. She has taught you how to earn better, especially for those with businesses. Your business is not maximizing its earnings because the structure is not in place. I strongly recommend that you don't try to work alone when you work in the business of making more money. You need to work with people. We all work with people. We learn from people. We pay people to get advice, and the difference is usually clear. Okay, so I want to get into the Invest Better part of today's conversation. But first of all, introduction. For those of you who do not know me, and I dare say there are a few of you on the call, my name is Tobore Olumoye. I am a personal finance coach. I am excited about everything that has to do with money. I am more excited, and I'm going to use this word very carefully. I am more bothered about your personal finance. While your business finance is good, your personal finance has so much power, it can wreck your business finance. And that's why I'm bothered about it, because when the chips are down, we are individuals and we have a lot of capacity. If the business fails and the individual thrives, the individual can rebuild a business. But when the business thrives and the individual fails, the individual can't kill the business. And that's what I am all about, personal finance, helping people do better with their finances. I've been doing my introduction over and over again. If you want the long form of my introduction, it's all over the videos on YouTube and other social media handles. And while we're on this, please, if you're on YouTube, please subscribe and follow so that you get the notifications as they come. I have been in the finance space for 23 years plus now, and I keep being extremely passionate about personal finance. I want as many people as possible to get out of the poverty net, out of the poverty bracket, out of the poverty pill, out of the poverty pit. I want more and more people to thrive in their finances. That's who I am. That's what I do. So why am I bothered about people making better investment choices or even knowing about investment at all? Chidera, please confirm you can see my slides. I'm getting some notification here.
Very well.
Okay, I'm sorry, I'll keep checking from time to time because I'm sharing my screen and I may not see. So why am I bothered? And more importantly, why should you be bothered? Children of God, let nobody deceive you. If you are not investing, you are dulling. That's what, Gen Z, is that how you say it now? Don't play. If you are not investing, you are sleeping on the bicycle. You are wasting time, and time punishes you severely when you waste it. It blesses you beyond measure when you use it well. And that's why you should be bothered that you are not doing your investment, you're not getting your investment game up. You should be bothered. And more importantly, why you should be bothered is if you don't invest now, and if you don't invest better, you're losing money. And when you lose money, it doesn't affect just you, it affects the future generations. So I am bothered when you are not bothered. I am bothered because it is my life's mission to reduce the high rate of financial illiteracy, plaguing not just Africans on the continent, but Africans in diaspora as well. So I've shared with you why I am bothered and why you should be too. Okay, so today we're going to cover a few things. We'll do a very quick test. If you know me, if you're familiar with my way of doing things, you'll know that I always ask questions. So we'll do a quick test. We'll look at the fundamental principles of investment. We'll look at types of investment risks. We'll look at investment vehicles. We'll look at diversification, and then common investment mistakes and tips. Okay, so bring out something to write with. Very quickly, let's do a very quick test, very simple test and quick. Do you have something to write with? Grab a pencil, eye pencil, lipstick. Today, just just 3 simple questions. I'm not asking you 26 questions. Don't be afraid. 3 simple questions, and I'll go right in. What are we trying to do? We want to do a very quick test about where you are on your investment journey, and it's a simple test. The more robust tests happen later. We certainly cannot do that on a short call like this. Okay, I've wasted enough of your time waiting for you to get pencil and paper. I assume you have something to write with. Chidera, please let me check the chat box where we'll have confirmation, or if I can see an emoji showing. So question number 1.
Text time.
Okay. Question number 1, list out all your investments. Listen, so you can write out the question. Or Theodora, I can help them write the question in the chat. Just list out your investments. If you're doing it right, it should take you time, right? It will take you about 10, 15 minutes to do. But if you are going through a lot and a lot is going through you, some of you have finished listing it out already. List out all your investments. Now, question number 2, for each of those investments, I want to ask you this question. How did you come to learn about those investments? Did you do any personal research on your own about those investments? Then for each of those investments, have you continued to improve on your knowledge of those investments? So you have a list of investments, right? Now, beside each of them, answer the question, how did you come to learn about it? Have you done any additional research? Are you currently improving on your knowledge around that your investment? Is your investment, or you put money inside? So I've asked you this easy peasy question, number 2. Question number 3, beside each of those investments, so you're going to have like a table. So you have the name of investment, then you have information about the investment, how you got the information and how you're improving on your knowledge. And then the third part is, how much have you made from each of those investments from January to date? Now, here's the thing. I told you just 3 questions. There are many, but let's do just the simple 3. Today is not yes and today, not yes and no. But if you notice, for some people, you claim to be investing. That's even the most bothersome part. You claim that you have investment. You even say it with pride. Now, the question is, how much have you made from that investment? You should know. Yes, for some people, because the numbers are bigger and more complex, you may not have it down to the nearest Naira and Kobo, but you should have a vague idea. You should be able to say, oh, from this asset, I made so and so. And you should have those numbers at just off the top of your head. And you might ask yourself, why should I? because those numbers contribute to your net worth, and you should know your net worth as you move along day by day, moment by moment. You should have an idea of your personal net worth. So we've checked. Now, after answering those questions, I just want to ask you, how have you fared on your investment journey? How far? Mr. Investor and Madam Investor, how have you fared? Now that I have your attention, let me use this opportunity because it's being recorded. I want to say this on this live stream. I want to give my heartfelt appreciation to Chide. I don't know if Chide is here, Chide is on the call, if she's on YouTube or what's on Zoom. But you see this hair I'm wearing, my birthday is tomorrow, and Chide sent me this hair yesterday. I am so grateful. And I want to publicly say, Chide, thank you so much. God bless you for making me look like I'm a bigger investor than I currently am. Thank you. Wherever you are praying today, please remember to say a word of prayers for her. Now, how far? How have you fared on your investment journey? You will agree with me that for many of us, there is a lot more that can be done better. And that's what we're going to discuss today. What can we do better? How can we improve? The first place to start. Again, I'm going to apologize if I'm moving a bit fast. Please bear with me. We just want to see if we can cover as much as possible in the shortest possible time. So the first place to start is always from the principles. Always start from the principles. If you say you are an investor, do you know the principles of investing? You must know the principles. And like everything in life, the principles do not fail. That's why they are called principles. Principles are the guiding blocks. They are the ethos of the thing. They are the reason things happen the way they do. And if you don't understand the principles, chances are you will keep making mistakes that you could have avoided. Theodora, as I go along, please let me know if there are comments in the chat box. Since I can't see them, I'll just need your constant feedback, please. Can anyone hear me? Can Theodora hear me? Okay.
Very well, ma'am.
All right, thank you. I'm sorry, I'll just keep checking from time to time because of the network challenges we tend to have. Okay, so let's go right into the principles of investing. And some of them may be familiar to you, some may not be. Then I also want to tell you that over the course of today's conversation, you'll find out that many things overlap. You will see that some things keep reoccurring. And there's a reason for that. It's because when it comes to money, money doesn't play, it touches so many aspects. Okay, so let's go right in. What are the fundamental principles of investment? These are the 10 basic principles. And if you don't want to mess yourself up, please don't joke with them. The 10 fundamental principles of investment are the risk-return trade-off. We all know this one. The higher the risk, the higher the return. Well, we say it with so much laissez-faire behavior. Oh, the higher the risk, oh, the higher the return. But do we know that it's a fundamental principle? Diversification is the second most important principle of investing. You cannot put all of your eggs in one basket. And I like to tell people, you shouldn't even put your different eggs in different baskets of the same fabric or the same material. You're exposing them to the same type of risk. In fact, if you want to go deeper, you shouldn't even have the same type of eggs anyway. You should have, why do you have only quaggas? You should have ostrich egg, monkey. Does monkey have egg? No, which other animal? You know, pupuyeke egg, pepeye egg, fowl egg, different types of assorted eggs, but we'll look at that. So diversification is a critical part of investing. Time horizon is a principle of investing. Liquidity is a principle. Inflation protection is a principle. Compounding is a principle. Asset allocation is a principle. Risk management, due diligence, and consistency and patience are core principles of investing. We'll look at some of them in details later. But look at this list. If there's any one of them that is not clear to you, you can take note and we'll answer it after the session, because you'll find out that most of it will be clear as we go along. But these are the core principles of investment. So if you look at this list and it's not making sense to you, you already know that you are joking or you're taking a risk with your investment, okay? And talking about risks, let's talk about investment risk. And this is something I want us to talk about very seriously. I hear a lot of people say, oh, the bigger the risk, the bigger the return. So I'm willing to take the risk. I have high risk appetite. oh, I'm ready. I'm ready. I got this. I'm ready to go in. I'm ready to go all in. And they actually go in. 2 seconds, they start shouting, hey, what is this? Oh, money have lost. Oh, it have failed. And then they start wailing. It tells me that you did not understand the meaning of the word risk. Another thing I see people do is that they underestimate risk. They think risk is a joke. It's a fancy word. No, it's not. If you hear anywhere here investment with this ear, the other ear you hear the word that was not mentioned, risk. And now there's a problem with risk. Risk is diverse. There's a plethora of risk when it comes to investment. And today we're going to take some bit of time to look at the different types of risks investments are usually exposed to. Again, Theodora, I'm sorry, I'm going to just keep checking because I can't see. I just want to be sure you can still hear me and see my screen.
Yes, ma'am, we can hear you and see your screen.
All right, thank you very much. Please check with YouTube as well. I'll keep getting this feedback from time to time if you don't mind. All right, so let's look at the different risks when it comes to investment. There are typically 2 types of risks. There's a systemic risk and there's the systematic risk. So let's start with the systematic risk. Systematic risks are generally risks that we usually will say these are risks that you do not have control over. You cannot, you know how people say diversify your portfolio so that it's you diversify your risk. No, when it comes to systematic risk, you cannot diversify most of them away because they are typically beyond your control. They are market-wide, they're external. So you don't have so much control over them. For example, and here we're going to look at 6 of them, 6 systematic risks. The first one here is the market risk. When you say market, what does this mean for you? Market risk is basically, I'd like to say the risk of the market. It is basically how the entire forces of demand, supply, the marketplace comes to play. For example, the biggest risk for the investor in this place will be that overall market conditions affect the investment overall. So it's not like you did anything in particular overall. And let me give an example. When there's a downturn in the market, stock prices crash. For no reason, just because there's a downturn. Sometimes a very powerful president somewhere, the president does not know you, you don't know the president, does not concern you, but the president somewhere just makes a pronouncement. And you will see, if you look at the numbers, if you look at the needles over the market charts, you will just see the market tumbling, everybody's going. Now, because the market is in that state, your portfolio is affected, your investment is affected. Meanwhile, you'll be asking, which concern with the president talk with the market? It is market. It is the way the market reacts. Now, that kind of risk is called market risk. You will agree with me that whether you diversify or you don't diversify, the fact that you have something in the market, it affects your investment. The second type of risk is inflation risk. And inflation risk basically means that rising prices will begin to erode the purchasing power of your investment returns. So for example, you had gone into this investment so that you could make 100,000 naira at the end of the year. And at the end of the year, you had planned that, with that 100,000 naira, you were going to take care of Christmas shopping for the family. Then inflation comes to play. And suddenly, it's not as if you did not invest, you invested. It's not as if you bought extra picking. It's not as if you just were minding your business. But December comes, you go to the market with your 100,000 naira, thinking that, you will buy things worth 60,000 and have 40,000 for extra flexing and spa treatment. But you enter the market with, especially if you go to maybe Rome Massy market, you enter the market and you are still inside the market and you don't understand what you're seeing in your hand. You're seeing 5,000 naira, but the 95,000 that you cannot see the things you bought with the 95,000. There's no point looking confused. Money not lost. It's inflation that happened. Inflation risk is beyond your control. It has happened to the entire unit and everybody gets affected, especially the investments in that place. So inflation risk is the second systematic risk. The third risk is interest rate risk. Interest rates affect certain kinds of investment. So for example, when interest rates go high, bond rates come down when because of that inverse relationship. So as in your mind, you'll be like, what is my business with interest rates? That one concerns bank and people that are borrowing. No, the fact that your investment is in that space where interest rates can impact on it means that it can be affected by interest rates. It's also a function. It also affects people who invest in lending. If you're in the lending space, if you're in the debt financing space, interest rates can affect your investment significantly. Currency and exchange rate risk. We're in Nigeria, so this is not too unfamiliar for us. For many people in certain stable climes, this is not a big deal. But for us in our country, because of the unstable nature of our currency, we'll find out that when there's an exchange rate fluctuation, your portfolio can lose value or gain value, depending on how it goes. Now, because there's the risk that your portfolio can lose value, it means that it is exposed to currency or exchange rate risk. Okay, I hope this is clear so far. I'll just pause to get some. Let me see your emojis if it's clear. And for those on YouTube. Okay. Okay, great. Then we have political and regulatory risk. This one, we should be familiar with it. In case you are not too familiar, just wait till another cycle is about to start. For those in the US, you are familiar. For those in the UK, you are familiar with it. Political and regulatory risk, the entire, our government, our people say after God is government. Government has so much power that one pronouncement can affect the entire portfolio of a country. Government has so much power that one decision can affect not just governance, it can affect the wealth of the citizens of a country. We have many examples. A president sits in the US, makes a pronouncement, and portfolios across the world are affected. That's a political risk. The fact that you have exposures in that country means that your assets are also exposed to that risk. Regulatory risk is, I think we've seen a bit of that in when CBN made a pronouncement, that's like 2 weeks ago. No, it wasn't the CBN, it was the SEC, the Securities and Exchange Commission, about the reporting format that asset managers are now going to use for reporting their fixed income portfolios. Because of that pronouncement, you can see that for a lot of people, they have to now reshuffle their asset classes and even their portfolios because of a regulator. So a regulator can affect your entire portfolio. That risk is called regulatory risk. You can invest in a business, and today government says, you know what, we're no longer importing the raw material required for your production. One pronouncement, your factory comes tumbling down. That is because your business is exposed to regulatory risk. There's timing risk. Timing risk it depends on when you enter the market. At a particular time, the market might be doing well. At another time, the market might not be doing well. It's not your fault. Let's say you are born in 2000 and you became an adult in 2018. That's when you became an adult. And you say, oh, I want to start investing. You cannot say, oh, because the market was doing well in 2003, I want to backdate my investment. No, it's not that you're becoming an adult. You are now entering at this time. And because you're entering at that time, you are exposed to whatever the market is facing at that time. Market risk, inflation risk, interest rate risk, currency exchange rate risk, political and regulatory risk, and timing risk are all systematic risks. You will notice that these risks are actually somewhat beyond your control. So when you want to do investing, when you want to say, oh, I want to take up an investment, understand at the back of your mind, understand that these are some of the risks that can impact your portfolio, and they are totally outside of your control. If there are risks that are outside of your control, it therefore means that there are some risks that are somewhat within your control, and those risks, we term them as unsystematic risk. They do not affect the entire system. They are specific to your company, specific to your sector, or you as a person. So for these kinds of risks, diversification can help you manage them. And some of them are credit risk, liquidity risk, reinvestment risk, concentration risk, fraud, mismanagement risk, and emotional behavioral risk. So these are the risks that are within your control. So, for example, let's almost start with the one that we are most conversant with, which is emotional risk. So for emotional risk or behavioral risk, this is directly affected by you, the individual. And I like to talk about this risk because for many people, this risk stems from even ignorance. If I ask you, those of you listening to me today, do you know your money personality type? Do you know it? It's shocking that for many people, they don't know it. Meaning that you don't even know why you relate with money the way you do. There's a reason you do. There's a reason you seem to always spend when you have said, I will never spend again. There's a reason you seem to not be able to spend even when you know you should spend. You know you want to invest. You know investment is good, but somehow you can't see yourself. You are afraid. People are thriving, but there's a reason. It is your personality type. Do you even know it? If you don't know it, how do you even want to start? And all of that because you are exposed to that particular risk, your portfolio will be impacted. Of course, emotional risk for some people, fear, greed. You are investing because you're afraid. Oh God, I don't know what's going to happen. My children's school fees is not complete. Hey God, my child will soon finish primary school. There's no money for secondary school. Ah, Father, what do I do? And because you're in a state of fear and panic, someone now comes and says, I see this your money. If you just bring it, we'll just run it 1 or 2. Yeah, the money will just double. And because you are afraid, you are scared, because you are panicking, your brain is no longer calm enough to make those rational decisions of exploring the risks to be able to make a good decision. So you, in that emotional state, your decision making can be impaired. Your finances are therefore exposed to that risk. Sometimes you already have a portfolio, and then you hear something over the news. There's liquidity crisis. Oh, bank say, CBN say bank should do this. Oh, SEC say asset management should do this. Oh, this and that. And then you start panicking. They say dollar has moved to 1.5. I'm going to convert all my naira to dollar. Oh, dollar has crashed. Oh, I'm going to sell dollar. Take it easy. But you see, all of those decisions you make in that space is because you yourself are the risk element. Your emotions, your behaviors are putting your portfolio at risk. Fraud mismanagement. This is common, especially for those of you in business. This is basically the possibility that your company can be exposed to fraud. Once you are working with human beings, they can become fraudulent. Even if you're not working with human beings, technology hacks, systems can fail, and frauds can occur. Or the management of the organization. Sometimes you put your money in a good place. They've been paying you consistently over 20 years. Every quarter, they pay you returns. Then suddenly, the man that was managing the business dies and the son takes over. The one doing the son is not to be paying you. He comes with one harebrained plan, and that entire system crashes. Due to his mismanagement, your portfolio is also impaired. So that is fraud or mismanagement risk, usually caused by the human beings in the business. Reinvestment risk. Okay, so some of these risks are also tied to different types of portfolios, right? So when it comes to reinvestment risk, usually this, for those who play in the bond market, you'll be familiar with this. Maybe as at the time you bought the bonds, the market was good and your coupons were beautiful, you were earning well. But at the time you want to now reinvest those coupons, for example, the bond market is doing badly. Remember that you are getting your coupons based on the original agreement you had when you were buying the bond, the original price of the bonds. So your coupon is fixed, that income is fixed. But now you want to reinvest that coupon, that payment, so to say, the interest, for those who do not know what coupons are. You want to reinvest it, but instead of it to see 8%, you are seeing the market saying they're going to return 4% to you, because remember, interest rates have also gone up. And you are like, I don't understand what's going on. Reinvestment risk is very closely tied to timing. Now, the risk that you are unable to reinvest is based on your peculiar portfolio or what's happening in the bond market at that time. This is a risk that is very common for people who play in the bond space. Okay, liquidity risk. This one is very common. In fact, this is one risk I try to draw people's attention to. People who people who like to say, oh, let me give the best example for liquidity risk. Okay, real estate. You see a man, he has children, and he says, oh, Toby, I don't know all these people's bond, fixed income, all those things. I'm not interested. You see, real estate is the only investment. In fact, oh, I have houses in Kantagora, I have houses in Ekaprambe, I have houses in Rupoku, I have houses, house builder, we're done. And then you ask him, how far for your children's school fees? Next, he said, well, I have investment. I know you have investment. Okay, this investment, do you have any that is liquid enough to pay these invoices that are due? Because your asset may be tied up in such a fixed state that you're unable to liquidate. And then you now hear things like, but the land is worth 200 million. I know it's worth 200 million in theory. Now, this 200 million, now, how does it translate to paying the school fees of 2 million naira? And then the man starts struggling. Oh, who can come and buy this land? It's 200 million, but I want to sell it 100 million. And then the person who has 100 million will come and say, you know what, I actually don't feel like buying this land, child. I just want to help you. So if you sell it for 60 million, I will give you, and I'll give you cash. Because you are illiquid, you will sell at a discount. You will sell below par. The reason is simple. Your portfolio was not liquid enough. And liquidity risk is a real risk. It is the risk that you may be unable to quickly convert your investment to liquid state, which is the state you need to spend. Okay, and of course, credit risk. This is the one that is pretty common for people who do lending. Credit risk is the risk of default. Oh, the person I lend money to. And let me say this, many of you on this call, because one or two things will touch you today. You tell the person, look, you cannot put all your money in high risk investment. You cannot. No, you heard the person, I beg. How can I put my money in, I put 100 million in asset management, and at the end of the year, they'll give me only 20 million. For what? You say this money, if I put it in my business, I know what it will give me. Businessman, we're done. Oh no, there's one man like that used to borrow money from me. I do 20% a month, flat. And the man has never defaulted. Then, in fact, so this your 20 million if you want to give me is money that I will make in 1 month. And you're telling me put it for the year. When you give him that 100 million, understand that you have immediately, as you just gave him that money, immediately you have exposed that entire sum to credit risk. What is credit risk? The risk that that loan or whatever, it depends on how you put it, whether you call it a loan or however you want to coin it. But the risk that your investment, that your money will not be repaid. And credit risk is extremely common for people who do lending. Now, here's another part of credit risk. Credit risk is also possible with corporations and governments. For example, commercial papers. When you buy a commercial paper, remember, commercial papers are unsecured, right? So when you buy that commercial paper, and the name on the commercial paper is Lazarus and Sons Limited, they want to raise 5 million. The minute you get into that transaction, understand that credit risk is a real thing because you have lent to that corporation. If they default, then credit risk crystallizes because they are unable to pay. Or you even lend to a government that is unable to repay that facility. Anytime you do lending, just know that there's a risk of credit risk crystallizing. Okay, Theodora, I just want to check. I hope this is clear. I would like to see some sign that we are following so far. With the different types of risk, let me pause and just get your thoughts. So far, have you identified any risk? How many of us have experienced any of this type of risk ever? Any sign? How are people on YouTube faring?
Yes, they are responding.
Let me go to the chat box. Has anyone experienced any of these risks? Has it crystallized before? Okay. Okay. Fantastic. Okay. So some of you have, some of these things we are saying is beginning to make sense to you, right? All right. So let's go quickly into investment vehicles. By the way, I hope you like this my investment vehicle, very beautiful. Instead of using color, paint it with money. How much is money? Investment vehicles. We keep hearing this phrase. What are investment vehicles? What does it even mean? And if you're in investment, please understand this phrase. By the way, the reason we're having this session today is obviously we cannot do all of this in one day. It's not possible. Investment is in fact, you can have a degree course out of investment. Is that voluminous? But what I want to achieve today is that when you hear some of these terms, they will not sound so strange. Sometimes you try to study on your own, but there's nobody to really explain it and break it down for you. That's why we're having this conversation today. Investment vehicles are the kinds of words you hear bandied about in investment places. And if you don't know what they're talking about, you just might struggle. So anytime you hear the term investment vehicle, what they mean is those are the products, services, or legal structures that enable investors put money into assets with the expectation of generating return. So anything you put money inside or an asset, or you put something inside with the expectation of getting something, that's an investment vehicle. Okay, and we'll just look at some of them very quickly. Sorry. Okay, we'll look at them very quickly, and we'll look at them by classification. The investment vehicles are typically classified in many ways. For those of you who will go back to watch on YouTube, if you notice, I loaded this particular, the next couple of screens, I loaded them with information so that you can take the time to understand them. It's important that you know this. By asset class, by risk level, by liquidity, etc., etc. We'll look at them in a moment. But I took the pains to put it like this so that you can see it for yourself. Investment vehicles. So when you hear investment vehicles, they're usually classified according to different behaviors. The first classification is by class. By the different class, they are grouped in different ways. So you can have them as equities, fixed income, cash and equivalents, real assets, alternative investment. So this is one type of classification. Okay, so when you say, oh, my portfolio is diversified, it tells me that inside that your portfolio, you have different types of asset classes. Stocks, when you talk about stocks, it means what? Ownership in companies, capital gains, dividends. And if for those of you who don't know what equities are basically stocks. When you buy shares in a company, you means you own the company. If you sell those shares at a premium, it means you've made capital gain. If you wait for the company to make money and share to shareholders, it means you're going to get dividends, right? Fixed income, these are investments typically in bonds, because at every point in time, those instruments will pay you an amount. But let's use, for example, most bonds will pay you twice a year. So in the 6th month, you are sure of getting money out. In the 12th month, you are sure of getting money out. Because you are getting a particular amount out at regular time, is called a fixed income fund. Cash and cash equivalents, I mean, these are money market instruments, cash instruments, fixed deposits. Anything that happens within 1 year is treated really as money markets. So if you say, oh, I'm doing fixed deposit for 3 months, you are playing in the money market space. And that asset class is cash and cash equivalent. If you have 200,000 naira hidden inside that your brown trouser in your wardrobe, and it's under cash, that asset class is cash and cash equivalent. Real assets, these are typically assets that can be touched. So if you have investment in building, investment in machinery, investment in gold, investment in silver, in artwork. Although artwork is real, but some kinds of artwork can also feature as alternative. Okay, but if you trade, for those who actively trade in the art space, for instance, sculptures, you'll find out that those are real assets because you can touch them, they're tangible. Then you have alternative investments. As man begins to evolve, as man continues to evolve and becomes a complex being with complex markets, alternative kinds of trade solutions have begun to come out. And those are all treated as alternative investments. For example, hedge funds, which is basically controlled by a small group of people, very little regulation, just big boys trying to ensure that the money stays with them. Very similar to private equity. It's not your typical investment space. We are just together, want to just run 1 or 2. All of those are under alternative investment. And of course, collectibles. There are people who collect items. It can be artwork, it can be stamps, can be rare coins, can be cowrie shells, can be strange shells. And if you are here on this call because you've been very close to poverty, you don't know that people collect strange items. Let me put it to you now. There are people who are collectors of first edition books. So if you have a first edition book, you are a billionaire. You don't even know. Okay? So that all of those kinds of irregular or not normal investments class are classified as alternative investments. So if you want to classify investments according to class, this is the classification you will have. You can also classify by risk level. This is the degree of how will I put it now? The degree to which a loss can occur. So that's a risk level. We have low risk, moderate risk, high risk. When it comes to low risk, treasury bills, fixed deposit, money market funds are low risk. For those who are my clients, one of the biggest frustrations you will have is that when you sign up with me as your financial planner, I don't care how, if by now you will know. If you like, tell me, oh, this business is giving me 100 trillion billion. I don't care. If you like, tell me, oh, in the past 5 years, I made 600 trillion. Okay, I don't care. That's for you and your cup of tea. When it comes to your financial plan, we must lock in funds in low risk because we know, we understand how risk occurs. The fact that the risk did not crystallize for 100 years does not mean it will not crystallize in the 101st year. So there has to be low risk. And when we say low risk, anytime you hear low risk, those are typically investments that the probability of loss is almost zero. By the way, there's nothing like zero risk when it comes to investment. Every investment has a probability of loss, even when it is almost negligible. Sorry, even when it is almost zero or negligible. We also have moderate risk. These are risks that are not high, but certainly not low. For example, corporate bonds and balanced mutual funds. So when you go to apply for mutual funds, for those who may not know, mutual funds are basically a pool of funds. I always tell, if you sign up with me as your financial planner, the first fact you will find out is that the information I'm giving you and the information the asset manager is giving you will conflict. Because if you go by yourself, if you don't come through a financial planner, you use your 2 leg and go, they will tell you, oh, Ogado, the balance fund is doing very well. It's beautiful. Oh, our fixed income fund is very, very beautiful. Oh, you need to do more of our, the way they're saying this, it sounds beautiful until the risk crystallizes. So what I always tell my clients, I don't care how wealthy you are. Some of your funds must stay in the medium risk, in the low risk. Once you have put the low risk funds, then we'll not start playing, because all your funds can't stay in the low risk. You can't beat inflation with low risk. Then we'll not come to moderate risk. We'll not start playing small, and sometimes you will get your fingers burnt. You see that experience, you also need it. So corporate risk, corporate bonds, balanced mutual funds. With balanced funds, some of your funds are in stock market, some are in money market, so it balances out. So it's still moderate because the low risk is trying to counteract the effect of the high risk. Then we have the odogus of risk, the high risk, equities. For those of you who are in the NGX now, the Nigerian stock market, you're smiling and flexing. Oh, they paid me dividend. Oh, very beautiful. Oh, capital gain, you're flexing. But remember that the market can go south, and most times it does. When it goes south, I hope you remember to come and tell us that, I'm going through a lot. Because most times people will only share the success stories. My role today is to tell you that when it comes to high risk, the class is equities, derivatives, cryptocurrencies, venture capital, people of God, that your business you are doing, that you're feeling very cool. Oh, I'm a CEO, I have a risk management procedure in place, I have 200 staff, oh, want to do one thing, guys, venture capital, it's at risk, the risk is very high. And this is where I usually have a bit of a challenge with the MSMEs. They believe that, oh, this money, instead of me to put it in investment, I'll put it in business. When you put that money in business, you have exposed your entire asset class to high risk, and it can crystallize. So venture is high risk, equities. By the way, you see that anywhere you see equities, not that there's business at the back. It is the same venture risk that is driving the equities risk. Okay? So this by risk level is another classification. By liquidity, how quickly can I convert my investment to cash? That's liquidity classification. Some things are highly liquid. Like nowadays, you can sell your stocks. If you want to sell it tomorrow, once the market opens, you can sell. Although some stocks you cannot so easily sell, but you can sell if the price is right. ETFs, money market funds, fixed deposits. Most of those things you can sell. They are highly liquid. Cash is always liquid. Okay, moderately liquid bonds, mutual funds, again, depending on the redemption plan, because mutual funds depends on what the fund is investing in, can be moderate or highly liquid. Illiquid, real estate. Real estate will always be number one when it comes to illiquid assets. So when you're buying that your land, some of you, and I'm going to say this with every degree of respect, when you buy that land for land banking, I'm usually very confused when you now come back and say, I want to sell it. I don't understand. You say you bought the land 5 years ago, guy, it has not reached. Still wait small. It's land banking. Wait. You bought land 2 years ago. Now you say you're broke, you want to sell. You can't sell. It's illiquid. So you will wait small. Or you've built a fine house, nobody's coming to rent, and they will rent. You just wait, be patient. Okay? You are dealing in an illiquid space. Understand it and have peace. Private equity. You cannot collect your money back after your brother came with a business idea. You said, oh, I love it. And when he looked at the market plan, beautiful. You looked at the business plan, oh, business canvas, fantastic. I said, I'll put 100 million because he told you, oh, if you put 100 million, you will get 40 million at the first year as per second year, you're looking for your 40 million, you're not saying. And you say, okay, please give me back my 100 million. It's not like that. You have invested in an illiquid asset class. Collectibles and startups, of course, all of these are clear. We've talked about them before. So by liquidity is another classification. By the type of returns you get, some are income generating, like bonds, dividend stocks, REITs, annuities. They return investment, they return, they give you some form of income at the end of the day. So if I put my money in, say, fixed deposit, and the bank, I agree with the bank that every 3 months you pay me interest. You pay the interest to me. It means it's an income generating investment, which is very common with bonds and dividend stock. Okay. So like Zenith has declared, they're going to pay. When they pay those dividends, it means that it's a dividend stock. So you're expecting some form of income. So by return type, some are income generating, some are capital appreciating, some are hybrid. So they both generate income and they grow. For capital appreciation, real estate is usually, especially the ones in certain places that are high, what's the word? They're developing. So you bought the land 5 million, you waited 4 years, and you're able to sell it 20 million. It means that what you've got is capital gain. That asset has appreciated. But not all real estate plays like that. Some play as income generating. You build a house and they paid you rentals, or you invested in some of the property, and later on as a pool, you sold it and shared the money. All of that is capital appreciation. Of course, some are hybrid, like balanced mutual funds, ETFs, and REITs. Okay. You can also classify by time horizon. Some investments are short term, some are medium term, some are long term, like treasury bills, safety deposits, money market are short term because they happen between 0 and 3 years. Some are medium term, 3 to 10 years, like bonds, balance funds, real estate funds, real estate investments, trust as well. Then some are long term, for instance, equities, pension funds, private equity, property, and some bonds are also long-term, depending if they're long, if they have long tenors attached to them. So bonds of 15, 20 years are long-term. Then you can also have classification by management style. So some mutual funds are actively managed by the organization. So the asset manager is the one actively managing the fund. You don't have any role. Your own is they will give you money at the end of the day. They will show you that, oh, it has, you've made so and so amount as accrued interest. And how they made it totally not concern you. Your own is, did you people make money, and where's my money that you made? Someone else manages it. Then you have passive management, like some index funds and passive ETFs. You are not, what's the word? As the company does not manage, you are the one who tells them, oh, please manage this for me, or I manage it myself. I'm the one managing the portfolio by myself, but the funds are held with them. But I decide what to buy and what to sell. Then you have self-directed, which is also similar to passive management. You buy yourself, you trade yourself, you sell off yourself. You don't need anybody's help for anything. So that by who manages the asset or the portfolio is also a classification. I know we are moving a bit fast, but I just want us to touch as much as possible. Now let's talk about these two that are not very common. Your assets can be managed by geography. Where is the portfolio sitting? Where is the investment sitting? Domestic investments are within your country. Local, let's say investment in Nigerian treasury bills is Nigeria. Then you have international investments, global equities, ETFs, sovereign bonds. For those of you who trade on US denominated stock, you'll know that they are not based in Nigeria, but you're enjoying the benefits. It means that you are diversified by geography. Emerging markets, for those who are in construction, so those of you who are big players in investment, most times you'll be like, oh, we don't want to put this investment in Europe. We want to take it to Africa, where there are emerging markets and the margin of growth is much higher. So by location of that investment is geography. Then by regulation, some investments are highly regulated, some are not so highly regulated. For example, mutual funds, pension funds, ETFs are highly regulated. For instance, the Securities and Exchange Commission regulates those kinds of assets or those kinds of investments in Nigeria. Then we have the unregulated ones like hedge funds, angel investing, crypto. If you like, put 1 million naira there, oh, nobody cares. People are like angel investors. They'll tell you, come and stand, pitch your product, and then they'll give you money. That's fine. There's no regulation around it. So these are the classifications of investment. So anytime you hear investment vehicle, just know that it's usually by classification. Okay? I hope this is clear. Another term that you hear a lot is diversification. Oh, don't put all your eggs in one basket. Oh, diversify. What does it mean when you hear the word diversification? It means spreading your investment across different asset classes, different industries, different regions, so that the performance of one investment does not overly affect your entire portfolio. So you enter here diversification. Some of you say diversification, I'm diversifying my portfolio. I'm selling sugar, I'm selling rice, I'm selling puff. Okay. Inside you have diversified, but outside it's the same risk. Now that you have learned about risk, I hope you understand what's going on now. So when we say diversification, if you really want to diversify properly, you would diversify across many asset classifications. And let's look at a few of them. A well-diversified portfolio will include multiple asset classes. For example, the portfolio will have stocks, it will have bonds, it will have real estate, it will have cash, it will have alternative investment. So if all your money is sitting in cash, okay, your portfolio is not diversified. Even if you have cash dollar, cash euro, cash naira, cash cowrie, I don't know that thing. It's all cash. It's not diversified. Oh, a well-diversified portfolio also spreads within asset classes. So inside that asset class, where you have stocks and bonds, you can now have stocks, bonds, real estate, REITs inside the asset class. You can also have a diversified portfolio that covers different geographies. So as you make more money, there's a point you will grow to and you'll say, you know what? My portfolio is overexposed to Nigeria. I need to move some of my money out. It happens a lot. When you see, oh, an American wants to move some money to Africa, not be say to send your papa like that. They don't really rate you. What he's doing is diversifying his portfolio. Or you hear some people say, we want to get into the Asian market. Not that they love you as an Asian, they just want to diversify. So you're taking it out of a place where the risk is concentrated in a government. So you have some of it as domestic and some as international. Your portfolio should also have a balance between risk and time horizon. You can't have all your investments in short term. And let me say this now. Many of you, once they mention 10 years, 7 years, 5 years, it's too far, I beg. What if the organization dies? What if you die? Every time you think of someone else dying. We say invest for 15 years. No, 15 years, no. You have trust issues. Remember what we said about personality type? You want to be alive in 20 years, but you're not planning for 20 years. You must ensure that you balance your risk and your time horizon. People who are younger, young people, you have the time to play. So play in the equity space. This is the time to buy stock. When the market goes up and down, it's fine. You are young enough to absorb it. As you grow older, you cannot expose yourself too much to the equity space. You can now start playing in the safer, stable spaces. Okay, I know I'm rushing, but I just want us to cover as much as possible. I know I should have made it shorter, but I also don't want to leave any part of it without mentioning something in that area. But let me check. Theodore, I hope it's fine. YouTube, those on YouTube, how are they coping? Is Theodore here?
Very well, very well. I'm taking note of the questions so that
questions
to be
already.
easy. Yes.
Okay.
Yes.
All right. Thanks a lot. And on Zoom?
Yes, too.
Awesome. Okay.
Yeah,
So
yeah.
okay, thank you so much for the feedback. So I'm just showing you, this is just a pictorial representation of what we have said. You can have an aggressive portfolio, you can have a moderate portfolio, you can have a conservative portfolio. For those who have, like say, more than 10 years to retirement, you see that the portfolio is more aggressive. Look at the mix. You have 50% in stock because your portfolio can wait for the market to, because the market will, in your lifetime, you must see the stock market crash. You must, not stock market, you must see it now. In your lifetime, you will see the stock market boom, but it's sinusoidal, it moves up and down. But over time, it always goes in this direction. So you can wait. But by the time you are in retirement, you're looking yourself eyeball to eyeball, like me now. My retirement is saying hello, and I'm saying hi. In fact, technically, I've retired. So I'm a retiree like this now. But official age of retirement is saying hi. It's even hugging me now. By tomorrow night, it will hug me. Not very tightly, but it will hug. For someone like me, what am I doing here? But I can choose to play here based on personality. But my financial planner will never allow me to stay here. This is where I will start dancing. Okay? Because I don't have too much time to play. And conservatives, for people who are retired, people who are afraid, people who cannot shout. My husband have died. This more money they gave me, please, please, please. Let me just keep it where it will not lose. This is where you are. Those of you that are smart in your blood pressure will rise. Be patient. This is where you should be, in the conservative space. Okay? All right, you can always go back to watch it on YouTube. Let's talk about common investment mistakes. I will just list them very quickly. And as I'm calling it, just be answering your name. Don't unmute, just answer your name privately to yourself. As we mentioned, the mistake you have made. Mistake number one, you see this number one is the odogu of them all. You don't, if you're on this call, you don't have a financial planner. You don't have a financial plan. You're making an investment mistake. I don't care whether you're making billion, million. I've told you those things don't mean anything to me, because you can make 100 billion today and you will lose it tomorrow. I've been doing this for 23 years. I have seen billionaires come and go. Poverty does not respect your father. It doesn't care if you do not follow the principles. And then I've seen poor people become extremely wealthy and then become extremely poor, and because they did not pay attention. Then I've seen those that they were born with silver spoon. The silver spoon started to rust. Then they removed the silver spoon, put wooden spoon, sometimes no spoon. Then after a while, they got spoon. After 23 years, I've seen a lot. If you do not have a clear plan, what is your plan? What's your investment plan? There has to be a plan upon which you will build your investment. The plan can be something very simple, like, oh, in another 10 years, I want to build a deferred annuity plan, so that every year I put 100,000 naira per month. That's all I can afford. But every month, I put 100,000 every month, and I will use dollar cost averaging. I don't care how much the stocks are. I don't care. But every month I will buy stocks. At the end of the year, I will get 1.2. That's your plan personally. Now you are going to also need to work with a professional that will say, this is your plan. It's not a planning plan. Your plan is not planning. You are making a mistake. That is why you need to work with a professional. But if on your own you say, no, I don't need anybody's help, I'm very wise, I can do all things through Christ who strengthens me, beautiful, please go ahead and continue. But you must have a plan. Number two, you chase past performance, and this is where the mistake starts, especially for business owners. Oh, I've been doing this thing. I've been selling shoes in Rumasi market. Oh, shoe business is to move inside Rumasi. Oh, I will bring 5 containers of shoe for Rumasi. Don't play. Anything can happen. All of those things you're saying are historical data. The market can turn, things can change. Don't plan your future entirely on past performance. You can use past performance as a slight guide, but you cannot say, oh, this stock has always paid dividend, therefore they will pay dividend next year. No, you don't know. The factory can burn down. COVID-19 happened and industries that were booming shut down. So you don't know. Nobody knows the future, so you must hedge. So that's the second mistake many people make. They chase past performance. Lack of diversification. We've talked about this extensively. Trying to time the market. Yeah, Sabinos, I don't look this market. I don't look this crypto. The way I'm seeing it, it will just move tomorrow and I'll just position. Even the experts, even those who have been in finance for donkey years, they cannot plan it. If all of us could plan the market, why are we not all doing better? Because it's technically better. Don't try to time the market. The market is not your mate. Yes, you can make informed decisions, but always hedge. Ignoring your risk tolerance. We've talked about this. Go and check your blood pressure. Your blood pressure, your stable blood pressure is 145/92. And you say you want to do high risk investment. I got it. You don't get it. Okay, please know your risk tolerance. Don't come and add stroke to the one doing you. By the time add stroke to poverty is deadly. So know your risk tolerance and then have a plan that aligns with it. Overreacting to short-term market movements. So the market is moving well now, and you don't have a tobore in your life. You are now overexcited. Oh, like now the stock market anyway is beginning to calm down. The stock market is booming. Everybody say, oh, lay off of mutual funds. Mutual funds are not performing. I want to go and buy stock. Are you okay? What was your original plan? What was your plan? Have the plan and stick to it, irrespective of how the market moves. Because the market will always move up and down in the short term. Paying too much in fees and taxes. For those who have big portfolios, you need to, from time to time, look at your portfolio and see how much you're spending on fees. Your financial planner can help you rebalance your portfolio in such a way that your investments are restructured not to be too expensive to manage. Mistake number 8 is herd mentality. Everybody, they're in now. That's what's in vogue. So everybody is doing it. The crowd is investing in crypto. You're investing in crypto. The crowd is investing in mutual fund. I'm not saying be late to the party, but do you know why they're investing? Do you understand the investment? Or you're just behaving like a herd. The leader is going this way, so let me follow them. Everybody is saying, let's buy yam for Christmas. Everybody is saying, let's do it, and then you do. Why? That's a mistake. That's our mistake number 8. Number 9, not rebalancing the portfolio. Okay, yeah, so for people who have more robust portfolios, from time to time, you must step back and look at the portfolio. Is it with what's happening in the bond market now? Should I still have so much exposed to bonds with what's happening? But you see that decision, you don't just make it arbitrarily. You sit down with the expert and you rebalance. Okay, sorry. And number 10, ignoring inflation. Anyway, for us in Nigeria, you can't ignore inflation. But for a lot of people in diaspora, ignoring inflation is at your detriment. Okay, so these are most of the most common mistakes people make when it comes to investing. Let me share a few tips with you. It's almost time. Our time is almost up, but let me crave your indulgence and beg you for additional 5 minutes so that I will talk about this. Then I will let you go. Okay, Theodore, I hope we're still good.
Yes, we are. Very good.
Okay, so the first, okay, great. Thank you so much for the feedback. The first thing I'm going to say to you today, as your earnings improve, learn to work with experts. You see this life, and I think you heard Edith when she said it. Edith paid me money to be her financial planner, and she's a billionaire. I have people who earn almost minimum wage, and they pay. Please learn to work with people. I pay a lot of experts. I pay a lot. I spend a lot of money because you are only as good as what you know. As your earnings begin to improve, have some money aside to work with experts. They shorten the journey. There are some mistakes that you don't need to make. Stop being stingy. Stop thinking that you are so intelligent. Some of you actually believe you are super intelligent. Why? Because you earn 10 million a month, 15 million, 200 million. You can lose it in one day, or you can be making much more. So work with people who are a bit separated from you. You are too close to your money to see it clearly. I have a financial planner. I have many mentors. I pay people to learn. Stop. The whole money you make is not for you to eat. Stop eating with 2 hands. Ensure that you keep some money to learn. Ensure that you keep some money that will also go and make more money for you. Then you keep some to flex. But in all your doings, as you begin to improve, because you will make money, and this is me praying for you, you will make money, you will earn a lot more. But as the earnings come, try to work with experts. If you can't work with me, work with someone else. There are many people out there, especially for those of you abroad. Pay a financial planner, pay the money, and then let's sit down, be humble, and learn. This is the most important advice I will give you. Number two, which is also extremely important, you are your most important asset. See the way I took time to write it out. You are your most important asset. Please invest in yourself. We've been talking investments since, but you see this investment in self. Invest in yourself, improve on your value. Ask yourself, how were you in January? What do you now know different? And you'll find out that all of your improvement has to do with knowledge. What do you now know? Beyond what you have in your head, what have you implemented? What can you show the world that you can do better? The world is saying, bring value to me and I will pay for it. What can you do better? Invest in yourself, improve on yourself, do better. That is your real asset. You yourself, you are your biggest asset class. The third advice I'll give to you, and this is especially for young people and people who are currently struggling, and you are just looking for some quick hope, one fast thing. People sell hope a lot. By the way, we didn't talk about it, but some other time. When we have a personal finance, when we'll have our session in January, I will try to dwell more on that. But people sell hope a lot. So for those who are, you're in a fix, please don't borrow to fund a speculative investment. Don't do it. Don't say, oh, let me just borrow this 100K. I will just put it here, show odds. I'll just do it. We'll all run one or two. When you click, I'll just return the 100K and I'll flex the 100K. As you're doing like this, that's how your money is, you know. Try not to borrow to fund speculation. Don't use a guaranteed expense to fund an unguaranteed expenditure. Number 4, in fact, this one, as a Nigerian, from me to you, if you are in Nigeria, even for those of you in the US, let me not talk. Anywhere you are in the world, the way the world is now, the world is going topsy-turvy. Please, I know after this call, some of you, it's not even the one doing you. Anything I say, you still do me, is that the one? Forget it. What does she know? And it's true. Because I will still be here now. I'll be here when you will come back. Please, I beg you. You will also start buying Christmas rice, turkey, skirt, blouse, hair. You also start buying. As you are doing all of that, ensure that you position for next year. Next year is not coming to play. This is the time to start preparing for next year. I start my new year on the 5th of October every year. That's my new year. For some of you, your new year is January 1st. So by the time people are doing Happy New Year, I've done my own and passed, and people are coming to meet me. Please position yourself for the new year. All this plenty talk we have talked today is just the tip of the iceberg. Dig deeper. Yes, when you have learned the surface things, try and stay in a place where you can drill deeper. You can get the real essence of information. Hang around people who are on the same journey as you. This is not the time to belong to people that are in your mind, you want to change them. Who you can't. This is the time to hang around, surround yourself with people who are on the right path. They will help you on your journey. So position yourself for next year. Ask yourself, what's next year coming? With the tax laws coming into Nigeria, with all of the uncertainties, next year is pre-election year. So there's going to be a lot of movement. But for some people who position very well, next year is a year of wealth creation. So position yourself very well. And the last thing I would charge you to do today is what I would tell you to do in terms of taking action. Please work with me, and so that my work will be a lot easier. Work with me, and as more and more people work with me, we will help to spread the message faster and wider. You can join, if you cannot work with me one-on-one, you can join my community. I have a financial community. We will start again in January. The cohort that is there now, it will run to December. And for many people, it's been life transforming. But we'll start again in January. So just watch out for it. See if you can join the community where we learn, we talk about money, people take action, and lives are actually changed. So these are the tips I will give you on your investment journey for today. And in all that we have said, I'm going to implore you to please take action. Take action. Tomorrow is my birthday, by the way. Let me make this big announcement. Tomorrow is my birthday. If you know me very well, I don't do discount. I don't like doing all those things, except someone has paid for it. But I'm turning 48 tomorrow, and according to Gen Z, I can't keep calm. I'm almost half a century old. I hardly do all of these kind of things, but I am actually tempted to, no, not tempted. I've actually made the decision. I'll make an offer for those who want to. If you can't afford it, it's fine. If you want me to be your financial planner to work with me one-on-one, I currently charge 350,000 naira. Many people on this call paid me 350,000, many. But I would look at them and tell them to forgive me. But between today is this, what's the time? The time is 1:35 p.m. For the next 48 hours, because I'll be turning 48 tomorrow, for the next 48 hours, I want to make you an offer that I have not made before. I don't do this kind of discount. So I'm going to, if you pay me 200,000 naira between now and 1:36 p.m. on Monday, if you pay me, I will become your financial planner and I will work with you for the next 1 year. And I will throw in a bonus that you will know when you've paid to join. So that's my give back to you, in addition to all that we have shared today. But before I let you go, I just want to say thank you very much. Please pray for me. Help me thank God. It's been quite a journey. Before I stop sharing the slide, let me just show you the last slide. If you want to stay in touch, you want to get in touch with me, these are my details. Okay, so you can reach me here. This is my number. It's the only number I have. Please try not to flash it. This is my number. This is my Facebook. If on Facebook, please, this is my active profile on Facebook. I'm active everywhere. Please go on YouTube and watch the videos, my podcasts. So these are my social media handles. Thank you so much for coming out today and help me thank God. He sent me on this errand and I've been doing it for a long time. Thank you so much for coming out to join us today and for sharing your precious Saturday with us. I'm sorry I took 6 minutes of your time, but this webinar is officially over. Thank you very much. Thank you. We will not stop sharing yet. In case I want to answer, I will answer a couple of questions, then we'll stop sharing. We'll stop recording so that the recording will not be too long. Thank you very much. Thank you, thank you, thank you. For those on YouTube, you cannot see the messages. They're telling me thank you. They're telling me happy birthday. So Theodora, over to you. Thanks everyone. Thanks to all of you celebrating me.
As well. YouTube is as well with all their comments and
Wait, I cannot see my hair. Can you see my hair? I don't know. Did I show this hair? Are you seeing it?
It's on fire. Gold.
Oh, thank you. Thanks, everyone. Do we have any questions? Thanks, everyone. Thank you.
Please leave the screen with your leave the screen with your contact details.
Okay, is that what someone is saying?
Yes, please.
Oh, I'm sorry. Okay, let me just take it back there.
Yes.
Can you see it now?
It will come up on YouTube in a few seconds. So.
But can you see it on
okay.
Zoom?
Very well. It's on Zoom.
Okay. Is it on YouTube now?
Yes. Okay. So I shared
okay.
the question with you. But if you also want me to read them, I will.
Okay. Where did you share them with me? On WhatsApp?
Yeah.
Oh, okay. I can see them. Okay. So okay, so I'll just read. Theodora, go ahead and read the questions. But I can see from, we have quite a number of them. There are many. Ooh. Okay, so I can see from the questions, most likely what I will do will be I will go live. I will have a live session where I will answer the questions, just so that we don't keep too many people here. There are quite a number of questions. So Theodora, just remind me, we'll do a live session where we'll answer the questions. So I can attend to them in detail. I don't want to just rush through them. But Theodora, for the purpose of the recording, please go ahead and ask the question. I can take this off, right? Someone asked for this. I think I can take it off now.
Okay.
I'm sorry. Okay, Theodora, so let me stop sharing so they can see me. Or should I leave it? I don't know.
I'm sure they've taken screenshots.
Okay, so
I'm
I
sure.
can, let me exit the stop share. Okay, thank you. Thanks a lot. Theodora, please go ahead and read the questions so that others can. Thank you. Thank you. Someone says they thought I
Okay, so
made my hair myself. People don't know I'm very talented. Thanks a lot. No, I didn't make this one. I got it as a gift, ma. Thank you. Okay, go ahead, Theodora.
okay, so the first question is asking about personality types.
Oh, okay.
So where they can take the test to know their personality types.
Okay, we'll handle that because that personality type is a full session. Remember, we did it in the community several months ago, and it was quite revealing. I will take that in the live session. Go ahead.
Okay. Now the next question says, I'm always confused and need clarification. Please, is there any difference between the money market?
Hello, can you hear me, Theodora? Is it me or from? Oh my word.
I'll take it again.
Okay.
Please, is there any difference between the money market and mutual funds?
Oh, okay. So I understand. So the mutual funds is a collection of different funds. Money market refers to the type of instrument by classification, meaning that you can have a money market mutual fund, you can have a fixed income mutual fund, you can have a capital market mutual fund, you can have a real estate mutual fund. So if you have a real estate mutual fund, it means that everybody bringing their money together is investing in a mutual fund that invests only in real estate. If it's money market mutual fund, it means everybody bringing their money together, they're bringing their money to invest only in money market instruments like treasury bills, cash, short-term asset classifications. Everything that is in that pool can only be invested for 1 year. So 1 year and less. Do you understand? So the term mutual fund is more generic. The reason I'm explaining this is because I know it's a common error and I can quickly explain it. But if you go on YouTube, go to my YouTube lives, my past YouTube live videos. There's one where I said 5 most commonly asked questions. Please go and watch it. It is fantastic. I took the pain to break down explanation for mutual funds. Okay, Theodora, please go ahead. I hope this helps.
Okay, so we have two people. One is asking about concentration risk and the other about emotional risk.
Okay, I explained the emotional risk. That's based on your personality. That's what we talked about, personality type and your emotions. If you're afraid, if you're buying out of fear or greed or panic, and then concentration risk is when all of your portfolio is in one particular asset class or category or a particular, instead of being diversified across different classes, is that is in all of it's exposed to one particular investment class or classification. Okay, I hope that's clear. That's a short one I can quickly answer. Theodora, go ahead.
Okay, how can I achieve this kind of diversification with small change?
Okay, so no matter how small your change is, if you want to do the one that's managed by someone else, just open a money market mutual fund. Start with that. At least start. Then I would always encourage people, you can't do it alone. You need to work with people who can constantly guide you. I won't be able to answer. I don't know how small the change is. I won't even be able to explain because I need more information, which is why people pay to work with planner. Then the planner will sit with you and plan for you based on your own circumstances. But you can work with a community where you will listen, will teach everybody that, and they will take time. When you hear us say we spend 1 year may be long, but it's just 12 months. We'll take the time to drill down. Like in our community, I'm not sure there's any topic we've not talked about, all the way from business to personal finance. Okay, but let me give a very simple answer. If you want to at least start with a money market mutual fund. Start with that. Then you might do something small with venture. But for me to be able to advise you, I need a lot more information because I don't even know your temperament. I don't know your current asset size. I don't know. I don't have enough information. But where there's a struggle, I always tell people just start with a money market mutual fund. At least that way, there are different classes in it. Okay. Theodora, please go ahead. I hope this helps.
Okay. Another question is, very similar to the one you just answered. But the next question says, how do we classify high earners, medium, and low earners using the Nigerian today's economy?
It's difficult to say. It's difficult to say, it's difficult to say because. But let me give you a simple rule of thumb. In Nigeria today, if you earn 1.5 million naira a month, I will personally classify you as the middle class. 1.5 million. That's what I would classify you as middle class because your dollar is changing per second per second. So typically, if you earn up to $1,000 a month, you are not poor. Typically, you are not poor. But if you are below, I pray with you and I pray that God helps you, and I believe we'll be all right. You'll be growing small, but you are not in the middle class. I will struggle to put you in the middle class. Okay. So let me use numbers for people who might say 1.5 million is a lot. As of today in Nigeria, for you to fund your retirement adequately, you should be putting aside at least 200,000 a month minimum. If you're paying children school fees, if your child is attending a low-cost secondary school, you'll find out that you will spend at least 200,000 every month for school fees. If you have 3 children, that's 600,000. So you people will eat. Members of your family will die. You will contribute for burial. You will pay transportation. You want skin like milk. You rub cream. You rub powder. You buy data so that you can watch. You can learn online. I don't want to die. I don't want to go there. Today's investment. You know where we'll fight this fight is in January. When we finish doing Christmas party, come back in January when we'll have our financial roadmap. Then we'll look at numbers. No, that one I don't pull back. Tomorrow is my birthday. I don't want to fight. So let me not go into too many numbers. Theodora?
All right, ma'am. Okay, so I think we have 100-level student says, where can I take action? I think you answered it with where to start from.
Okay.
Yes. So for starters, currently I can't afford a financial planner. What should I do?
And so you learn on your own. You do it on your own. You watch videos. Like now, that's why you attended this class. You watch this one. Take the advice. Take the free advice. You can go on my YouTube video. I have a lot of videos. Be very careful about, and that's the danger. Don't be careful about learning from too many people, because I will come here now and tell you, oh, be conservative, then grow into moderate and high. Then some people will say, no, you see it now, go online. No, you have time, take a risk. Put the money there, let the money work for you. Take a risk. What's the worst that can happen? And then me, I'm telling you, be conservative. So you'll not be confused. Out of confusion, you just go and buy shawarma and eat and drink cold Fanta, especially Fanta. Fanta is very good to clear your brain. And that's why I beg, I cannot kill myself. Or you go on people's WhatsApp status. The first status will say, flex, so next of kin will eat your money. The next status will say, be careful of. So too many people are talking, your brain will now say, you know what, this life is, I cannot market myself. Let me go and buy shoe and wear. You start consoling yourself. So be careful who to listen to. But I can't really talk much. I leave my energy for those who pay me to focus on them. If you can't pay me, it's also okay. I know not everybody can pay me. Watch videos, then pray for a discerning spirit. But I will encourage you to be very conservative in accepting advice. Be conservative. Manage your expectations. Don't be too excitable. If it looks like it's too good to be true, it's too good to be true. But again, sometimes if you don't take a risk, not what will happen. So even myself, I'm here to also confuse you. Since you refuse to pay, that's how you'll be doing like that. But if you don't have money, and so you can take the discount offer. If you can also afford the discount offer, join the community. You cannot afford the community. I pray with you. I don't know what else to say. And this is still being recorded. Jesus. Theodora, no violence today, please. Tomorrow is my birthday.
Okay. All right. I'll stop the recording now. No, the recording will mean that we're going to it on YouTube.
No, for those on YouTube, no, it's okay. We'll so end. Don't worry, it's okay. Nobody will even believe me anyway. They don't believe I'm gentle. It's okay. So we'll just take one more question and then we'll wrap it up.
Okay.
Theodora? It seems we've lost Theodora. Theodora, can you hear me?
I think the last question more risk tolerance. To touch more on risk tolerance. Oh, my network.
Yeah, so risk. Oh, I'm sorry. Risk tolerance directly derives from your personality type and your state. So it depends on where you are. It depends on what you can absorb. Some people can take risk. I know somebody. I know. What am I saying? I have clients. Let me not say more than that. I have clients. They will tell you, so all this thing you are doing is very good, though, but don't try and stop me from doing one or two betting. They do sports betting. They're addicted to sports betting. So they will tell you in the financial plan, make provision for sports betting because they're excited. If they don't take risks, they are sad. And I don't want my client to be sad. So what I do, I collect the money for the financial plan and they will make a provision in the budget for betting. And they don't have a problem with losing. They don't have, losing money is not their problem. They go into deals that your hair will stand on end, but they will tell you, if I don't do it, I'm not happy. I am this. So such people, they have very high risk tolerance. It is my job to bring them back to their senses by protecting their plans from their behavior. Conversely, we have a lot of people who are extremely conservative. If they cannot see the end from the beginning, they will not climb that staircase. They want to see it. So such people, they don't want any investment. They just want to do cash. Let me put the money in this my savings account. Any day I want to withdraw it, I can withdraw. I know the interest is more, but they'll tell you. So such people are on the other extreme of the what's the word, of the spectrum. So some people are extremely conservative, others are extremely risk feeling. So you want to play in the middle, and it's only when you work with a planner, you work with an expert, that you can tell your tolerance. And then with time, with experience, if you cry too much when you lose money, just know that you don't have risk tolerance. Okay. I hope that helps. All right, everyone. Thank you so much. Thanks for coming to my webinar. Thank you for celebrating with me. God bless you all. Theodora, you can end the recording and the streaming. Thanks, everyone.